back at it again. So I'm going to make this short as much as I can, as much as I can, as it can be possible, right? So anyways, this video is dedicated to a friend of mine, Halifax, and he did good on gold, man. So gold is that instrument that I always, man, I love it so much. Even my valuation metrics, when I was doing really a research on its performance, I was using gold as the instrument, the main instrument. So you can see on my watch list, I only trade four things, man. Why is it buffering? It's only four things. I'll trade Euro USD, which is EU. I'll trade Nasdaq, and I'll trade GU, right? So most of the time I'll be trading these two. So anyways, so the reason why I'm doing this for him, and I'm dedicating this video to Halifax, is just that it was a really a remarkable results he had on the trade. He had like 500% on markup. So he was like, I've invested 100 rand. On his caption, he was like, I just wanted to show you what you could do with 100 rand. And he took it to a 500 rand. There's a 500 markup in. You don't even get that in investment. So anyways, because most of the investment, let's just get with it, man. I won't be really detailing my biography. There's no need for that. So anyways, it's a 4-hour chart. So my previous video, hopefully this is it has got to be my third to this point. And last thing I haven't really spoken about is that I'm being, I get caught up in some moment. I'm a little bit tied up in some things that I'm busy with, personal things, right? So this might be my pre-last video, if not my last video, but then not last, just for now to get past, just surpass these obstacles that I have, and then I can be back at it. So anyways, I won't be really elaborating on what has been happening with the price of the market or the instrument gold, because I already have a video up on that. So I think it has got to be a part 2 of that. Good. More like a market update, something like that. So the last, it was based on the NFP. Yeah, it was the non-farm payroll, which happened on the 3rd May 2024, the year that we're currently in. Right. So, yeah, I remember it was based on NFP, and then I was really onto what was happening previously on the price, and I took it from here. The last low pre-breaks at this point, as well as that one, man, as well as this is yeah, I remember this. So I think for me to really shorten this video, I'll take it from the NFP onwards. Good. So it's a 4-hour chart. Let me just do it like this. So as I'm trading the supply and demand, so I'm trading advanced supply and demand, which is a DTE concept. So anyways, you can observe here, generally recognize to be true of a price trend to the downside, with the price is displaying a markdown, right? So there was a drop, base, a drop, base, a drop, a base, a drop. That's the last swing low. This is our last swing. So is it okay? Let me just make it all. No, I think what is pretty much fine. So I'll just put it there, right? So now this means I'm bounding the price. I'm bounding the price, right? So you can see the price is really playing within these two urges, right? That bound, the high bound as well as the lower bound. Good. So you can see after we have that. So let me just put the break of structures and the change of characters, and then just take it from here. So you can see here, because those are the most important things when really we're doing any instances on any instrument. Let's just do this. Okay. There's a break of structure there. Then I am going to put it exactly at that point. The last break of structure is going to be at this point. Good. Good. So those are the break of structures to the downside, right? So I don't know, because most of the time when we have something like this, we'd be like it is a negative market imbalance, or negative imbalance, where we know that it is the last high pre-break. So it is a pre-break that results the price to really melt to the downside. So I don't know if we have something like a negative break of structure, meaning the price, the sellers, they break in the structure in order to sell at a premium to mark down the price, right? So I don't know, but anyways, let's not really be interested on those terminologies. Let's just be interested on the chart itself, how to really analyze and read what the price is looking for. Good. So the second thing is that those are the breakup structures to the downside, and I just want to get to this point. And then we had this rally, base, rally. It is a rally, base, rally, base, rally, base, and then this rally never took out the swing high, so it's more like a drop, base drop. So there's a sentimental price trend shift at this point. So what I'm going to be doing here, I'll just highlight this just like that. So I have to be taking it from here, just there, exactly there, right? And yeah, that's pretty much it. And I'll just change the color to this, reduce it to third, no problem. So good. So that's pretty much it. And this is the nearest demand zone. The price really went to the downside. This is a break of structure here. This is a change of character at this point. Excuse me, right? And then now what we observe, what really we need to do here is to go to our chart, because the price is too much fractal, so we're losing sight of some of the things that we need to really be really conscious about, like this demand zone that really formed a flip zone. It's a flip zone. Good. And put it right inside. I think it's too big. Let's just take it to 14. Is what do be much better. So good. And just change the color to this. So the price went to the downside, to the upside. It is a break of structure. This point it went to the upside, created the swing high, right? So it really respected something here, which is this supply zone. So it just wanted to close this last high pre-break, which is the market, the negative imbalance, so just the market inefficiency to the sell side, right? And the entries at this point. Good. As always, when you enter as of the supply, you take the previous candlestick, you swing low because it's of the supply. If it's of a demand, you take the previous candlestick, you swing high. It's a candlestick, and now it's a 38.2 candlestick that has like some swing high here, so you can answer of it as opposed to that. But that's good on a 15-minute chart. There's a 2-hour chart. 2-hour chart is not really recommended to do that. Even here, though I understand, the entry is exactly at this point. That's too much risk, because risking from here up to there, putting a stop loss at this point, is going to be more something like 70 points, which is it's going to be too much. 7 pips is too much, So I risk a maximum of 25 handles. So anyways, the price really went to the upside and later broke through, right? So with the excuse me, so with the flip zone, what we be like is that the price needs to go up in supply at this point. So what is next is us to navigate through and go to. So what we have in now is this. This is an hourly chart, right? So this means now we need to be supplying at this point. This was of a supply zone that was really dedicated by this, what we call this. Let's just reduce it anyway to this indecision candlestick. So, but we have to be putting it here. Let me just put it like that. Yeah, to really respect it specifically. But then the way we highlighted the monsoon, we have to take it from the close, open, meant to say, up to the swing low, right? And the swing high of this indecision candlestick is the entry points, and the stop loss here. That's in theory from a textbook, but from from a more of the execution point of view, depending on the points that you will be risking, you can put it there, right? And besides, it's an average chart, so those you might be really spanky with the ticks that you'll be dealing with. Excuse me. So anyways, you can observe that the price, it went to the upside and it led to this break of structure. So this means, as always in theory, when the price really marks to the upside, you need to supply from this zone, right? You need to supply from this zone. So we're going to do it like that. Good. So that's my supply zone of interest. I'm just going to be I'll just do like that, and you can see this this candlestick, it really rejected within the supply zone, but there were more buyers that there were just a momentum of buys, not that much, but they really needed to supply at a specific point. Good. And then so when the price is after the price led to the break of structure anywhere at this point, and you thinking of supplying here, I recommend using, you see, when you trade things like the market break of structure and things like the market break of structure and what not really the market break of structure, I mean the sentimental price range shift. That's what I want to say. I'm using excuse me. This is the area. Sentimental price range shifts area. You put it inside, no, okay, no problem. Let's just put it 12. Good. Let's put it above. Inside top. It's going to be good like that. So we took it from where it led to the break of structure and then upward. Good. And then that's the supply zone. So when you trade this, the best recommended way is to use the sentimental price range shift, right? I mean, when you trade the sentimental price range shift, where there's a flip zone like this, you need to really employ the net instrument price segment value. So it gives you the value of a price segment, the value from here up to here. This is a price segment, so it gives you the value of this in terms of numbers. So as I said previously, that you let this this part to be, you let it to be equals to 100, right? And then after doing that, you say you're going to supply. I'll put it vice versa. Let me just do it like this. That. We do this. Good. After doing this, you need to really observe, the values of this price trend. It is the net of it, right? It is the whole total of it. So you need to really observe the value of this price segment, and we need to supply a premium. And having this at 88.6, 79%, 70.5 within this area, it is good. And remember, this zone here, just this zone exactly at this point here, where there's a break of structure, we call this zone a sentimental price trend shift level, not the area. It is within the area, but then it is the level. Good. So now after having this, you need to really go to the downside and really try to check, is there any supply zone within here or that is on top of the, this